Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today, we just want to do a quick overview of what's happened in OPEC now that we're heading into September. We've seen some pricing talks, and just what is the update with that supply-demand metric and those dynamics. And then we're really going to wrap up with a special update in terms of India and China and what's happening there, just because it is a big friction point that I don't think gets enough attention in mainstream media. So just to kind of jump in terms of what is happening on the supply side, some adjustments. I don't know if you watched the EIA show, but we've had additional increase in some of the production coming back online. The U.S. Gulf right now, we're back. We only have about shut-ins of 368,000, which is about 20%. And then on the natural gas side, we have something similar, about 20%, which is equivalent to about 532 MMCF a day, with still 59 platforms evacuated. So we're starting to see, again, some of that normalcy. We talked about in the EIA show, we're seeing some of that production increase. It's just important to appreciate the whole picture when we're looking at what is happening in oil supply and how quickly can it come back. And it's also, when we start to talk about Latin America, you have to really look at what's happened in Brazil, because here you can see Brazil is really back not only above to where things were on an oil processing side, but what has happened in terms of their production. So on a production level, they got up to about 2.93 million barrels of oil equivalent a day in July, which is up from 2.85 in June. So we're starting to see a lot of this increase in oil production. Just looking at things on an aggregate level, oil production was about 3.1 million barrels a day, which is up 2.2% month over month and 10.9% year over year. So we continue to see this growth. And the reason why I just want to take a moment and talk about Latin America, it's the importance of crude quality. We see a lot of new refining capacity, petrochemical capacity coming back into the market, and you're really starting to see this growth in terms of coking demand and some of the heavier crude slates. So this is where we're starting to see this disconnect between what's happening in light sweet and what's happening in heavy sour and medium sweet. And that's why we're starting to see a lot more attention paid to what is happening at Guyana, what is happening within the neutral zone, Kuwait, UAE, and Saudi Arabia, because there is a lot of opportunity to bring some of these heavier, maybe lower quality barrels to market at a relative premium, just because of the new growth of refining capacity in the Middle East as well as Asia, as we see about another 2 million barrels expected to come back. To a new throughput to come online, which is again going to kind of weigh on, well, what are utilization rates going to be? Are we going to see some pressure really kind of moving through? And in the, last week's report, we did a deep dive on this, and that's where we start to look at, okay, well, what is shifting and what does that mean as we have additional production coming online? So if you'd like to learn more, we have a report for that. Now, just looking at what's happened with OPEC going now that we are close out August, we see that July versus August, we had an increase in production, which isn't surprising, about 550,000 barrels, which is actually less than what was allowed or what was expected. And you have to consider, okay, well, that should be a positive. But again, it was Nigeria. Iraq had a little bit of a decrease. Nigeria had a little bit of a decrease, but we did have a big step up in Saudi Arabia, UAE, and Kuwait across the GCC, and in terms of what they're doing. Now, the UAE is actually now above where they're supposed to be on their levels on the according to the OPEC Plus agreement. Nigeria, again, got closer to the mark, still missed it. Iraq, big swing and a miss. Now, the bigger issue is going to be Iraq. There's been rumors going around, headlines flying around talking about, well, Iraq's going to ask for to be excluded next year from the OPEC Plus agreement. Now they're saying that they don't need to be excluded. They never said that, but they will need a 2-month extension to bring some of this production down. So again, it's just movements of how do they bring in dollars? It's a struggling economy in a struggling world. And this is just their only way to bring in those dollars as they fight their own battles on a political level within the country. So I don't really expect much to come from kind of what's happening with Iraq, and we'll talk about them a bit more detail. Now, as we go forward, and we'll talk about some of the spreads and where we're seeing a lot of pressure in the physical market. But Saudi Aramco is expected to cut their official selling price of Arab light crude by $1 month over month for October sales. Now, that you typically see a little bit of headwinds coming through, just because you have the slowdown in just total demand. But again, it'll be interesting to see what they come in at and what kind of discount, because we do continue to see a lot of pressure in the market, specifically around some of the physical barrels. And now at the same time, when we talked about this increase in Saudi Arabian production, we have to appreciate that Saudi Arabia had their exports actually rose to about 6.2 million barrels a day as of August 18th. And it's interesting to see, because that remains higher than what we expected, and it comes down to less demand locally for the power burn. Maybe there's less demand just because people aren't doing as much due to COVID. But again, there's just more crude being put on the water and is competing in the market, which is one of the reasons why it's likely that we see a relatively steep decline in the official selling price of Saudi Arabia coming out later this week. And just giving kind of some support to that when we look at what's happening in China, and you consider, ESPO physical differentials versus Dubai and what's happening overall. And here you can see those October loadings really starting to come down, and you're starting to get that pressure on the contango level. And that's where we're starting to see that pressure come in. And it's really because we're not seeing that demand materialize in China and India, which is something that we're going to talk about in a little bit. And at the same time, we continue to see refiners struggling to operate, remaining well in the negative territory on a margin level, which again is putting additional pressure on their inherent, just bottlenecks overall. So when we shift gears a bit and we look at the Iraq exports, the bigger issue is not even just so much how much is production, but what are exports doing? And we see exports still remain over 3 million barrels a day. And there's just very little in terms of seeing that adjust. We've had some commentary from the KRG in terms of the CN pipeline seeing less going through, but again, it's incremental. We're not seeing a real marked shift lower because there's just not as much demand within Iraq. And again, it's a matter of getting it into the market, taking delivery of those dollars, which is going to keep weight on just that physical market, which is something that we continue to see throughout the world. Now, when we shift gears a little bit and look further out, and we evaluate Angola, Nigeria, and Norway, you can see that we've seen exports get shifted. So we've already seen deferrals out of September and into October, which again, it's just timing delays, but it's again, that slippage is where you start to see those builds, especially because we are getting increases in total Nigerian production, which if you look at the orange line, you can see that Nigeria is back to that 1.6 level. So you saw that big increase coming off of where they were supposed to be in September, and now right back to it. Now you're starting to see some of these export deferrals again in September, Bonnie Light, Forcados, but again, it's just you're seeing those increases, and it's just going to continue to walk itself up. Now, Norway is one that we wanted to talk about briefly because you had the big increase coming from into 2019 into 2020, and then you came down, and now you're coming back up. Angola has seen a little bit more pressure, and the reason why Angola has seen a little bit more pressure is because of the slowdown in Chinese demand, because a lot of the Angolan crude is cleared through China. So with the backlogs and the inherent issues, you're starting to see some of that get pushed back, and they're responding in kind by just cutting some production, just because there's no reason to, there's might as well cut production and then inherently cut flows and just kind of protect that margin and leave some of it in the ground. But again, we're starting to see some of these increases, something similar from Russia, where you've seen some walk back from Russia, but anything that's been reduced, you've seen an increase in refined product exports. So again, you have to look at them together. The next is just looking at global crude oil in transit. So as we've seen additional increases in production out of OPEC, you're starting to see more crude get back onto the water. And this is coming at a time where, again, seasonally significant in terms of the declines in runs, the decline in demand, just as you're starting to see more oil go into transit. Now, we have seen some crude come out of storage, get put back on, get moved onshore. But again, it's quickly being replaced, or at the same time being replaced by this crude oil in transit, which is something that we're going to continue to watch to see how much this increases, especially because there's enough VLCCs and backing for some of that additional flavor. Now, when we look at West African crude oil storage, this kind of comes back down to, well, why is Angola, cutting? Why are they starting to pare back? And it's because we see the West African crude oil floating storage increasing over the last week or so. And this is something where you can see that there's normally an increase as we go into September, but the question is going to be, where do we go going forward? And this is why we continue to see that pressure in the physical market, because there is this inconsistency with floating storage, which is really problematic, especially as we go to that shoulder season, which is where we lead into the Asian oil floating storage, where you can see that there is a big, there was a decline in terms of where that floating storage is, but we saw China make a sale to South Korea. We've seen some movements of oil cargoes as there's a resale in order to take advantage of, some of these differences. And again, this is something that's something to watch, because we expected a decline just given where things are, some of these movements. This was a little bit bigger than we were expecting, and it could be just because we had some movements from storage, and it's now in motion and heading towards South Korea, or we're starting to see some movements into Japan and going onshore. But again, when we go a little bit deeper into China and India, we think that there's going to be there's going to be a continuation of headwinds, specifically out of India. And just to kind of wrap up, because it's interesting to see when you look at crude tankers offshore China, and you can see just the sheer amount that remains out there. Now you can see that you're not that far, obviously, from South Korea. So to sell from one to the other is not overly difficult. And you can see that South Korea is also sitting on a near record amount of crude in storage, in floating storage onshore and offshore. And this is, again, going to remain problematic as we see additional flows hitting the market. And we're just not seeing that demand pull through, as we talked about in our econ show, with just in terms of daily activity, inherent mobility, slowdowns in China, slowdowns in Japan, slowdowns in South Korea. And then obviously the ramp up of issues within India itself is going to just impede not only oil demand, but refined product demand. And that whole seizing up with the supply chain is going to be a headwind, especially as we see the seasonality effects really start to take hold, which is what we're going to really kind of focus on a bit more as we go into a bit more depth in the next segment regarding just inherent demand in these key regions.